All right, we're live. So welcome back to Dapp University. So today we got a lot to talk about. The first thing is that another major payment giant is expanding into crypto. We're going to talk about that, what you need to understand. We're going to look at a lot of other news updates that have happened in the space since yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You'll find out about those whenever we go live. Watch out for us on Twitter, all that type of stuff, okay? We're going to answer some of your questions, look at the crypto markets, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is not be financial advice, and there's lots of scammers down in the comment section below. Just ignore them, like I'll never give you my phone number asking you to invest with me. Okay, so I'm going to turn my microphone up here. So if you're watching this with headphones or something like that, make sure you turn your headphones down. Let's see here. All right, so I think that's the level I want to speak at. Maybe pull back a little bit. All right, awesome. Okay, so we got people jumping in the chat here. We got Culture Hives. I am Jadine. Code Chap. Let's see here. Lee Roberts, DM. Welcome. Couple names in there I can't pronounce or can't say on camera. All right, so let's go ahead and jump in here. So let's talk about another major payment giant that is expanding into crypto, okay? So this is an ongoing trend, and the bigger picture that you need to see through all this is that there's rapid adoption of crypto technology, okay? So basically, people talk about cryptocurrency markets, potentially being in a super cycle, and what that means is essentially a long-term period of price increase without, massive long bear markets, right? So we don't know if that's going to happen for sure or not, but what does look like is happening is essentially a cryptocurrency adoption supercycle, where lots of people are coming in the space and create this huge snowball effect that doesn't really look like it's slowing down anytime soon, okay? So evidence of this is pretty much every major payment processor coming into crypto in some significant way, okay? We saw this with PayPal last year. Getting into cryptocurrencies, PayPal has rolled out incremental updates to their crypto platform to move away from people just buying and selling cryptocurrency to merchants holding it, to offering way more services, okay? We've seen Stripe get into crypto, okay? Stripe is a huge payment processor that's seen a ton of growth. We've seen Visa do lots of stuff with crypto. Their pilot project with Crypto.com, actually settling crypto transactions on the blockchain itself, building a layer 2 scaling solution on top of the Ethereum network to process stablecoin payments and central bank digital currencies. And then today, or yesterday, I should say, but today I want to talk about, another payment giant, MasterCard, okay, coming onto the scene and what they are planning on offering. Okay, so let's blow up the news on this because this is significant. So MasterCard and Bakkt roll out crypto tools for partner banks and fintech firms. And actually, I want to pull up a different article because I think it explains a little bit better in layman's terms. It has the high-level points here at the top. So basically, MasterCard says any bank or merchant on its vast network can soon offer crypto services. So really what this is doing is giving people who are already connected to the MasterCard network tools to offer crypto to their customers. So MasterCard is preparing to announce that any of the thousands of banks and millions of merchants on its payment network can soon integrate crypto into their products. So this includes Bitcoin wallets, all right, credit cards and debit cards that earn rewards in crypto and enable digital assets to be spent, all right, and loyalty programs where airline or hotel points can be converted into Bitcoin. Okay. So to do so, the payment network is partnering with Bakkt, the crypto firm recently spun off by, et cetera, et cetera, et cetera. So let's talk about why this is a big deal, okay? Because whenever we talked about the MasterCard news, it was like, hey, it's just a matter of time before, or sorry, when we talked about the Visa news initially, it's like it's just a matter of time before other, credit card companies answer them and start, getting into crypto in significant ways. This is not the first we've seen of MasterCard, but this is a new big step for sure. So what are the important things to think about? Well, we do see that it's going to enable people really to integrate crypto in however they want and covers the major use cases and also some new ones. So the major use case here being essentially allowing digital assets to be spent. So if you want to spend crypto, I'm assuming this means with your card that you could do that. The ability to actually earn crypto through rewards. Okay, this is something we've seen before, but this is also pretty essential. But we do see this new type of thing, which I haven't personally seen before. If it's out there, it's awesome that it's out there, but this will definitely expand the reach of it, which is the ability to take existing airline or hotel points, basically whatever rewards you've accrued from your credit card company, and convert them over into crypto. So it's a big deal. And at the end of the day, like I said, what I want to draw this back to is showing you this snowball effect that's happening. You just see more and more and more adoption. It almost seems like every week something major is happening that we can talk about that supports this case. And this MasterCard news is definitely significant in that regard. So let's talk about what I would like to see going on, past this, okay? Because we don't see clear details on how, the payments are being processed, and maybe the kind of thing where, it's just you hold cryptocurrency in your wallet, and whenever you swipe your credit card, it cashes you out of that crypto, and then the merchant receives dollars. How Visa's implementation is different, and what they look like they're doing long term, and the program they did with Crypto.com was that they actually settled transactions on a blockchain. So user holds crypto. Transaction happens, and it actually merchant receives crypto on the other end. Okay, so that's how I envision this, playing out over the long term. I don't have information that that's what's happening here, but that's where I think things are headed, because the savings that can happen on an inexpensive layer 2 scaling solution with blockchain technology can can provide benefits than traditional payment rails can't. Because right now, credit cards run on really old financial settlement. At least debit cards do. And that's one way I think that blockchain can really improve this problem long term. And that's what I'd like to see come out of this eventually. So I think we need time for that to happen. But that's what I would look forward to. Let me know what y'all think down in the comment section below. Okay, so and actually, one thing that's pretty interesting is one thing here that I didn't really talk about enough was the ability to earn crypto as reward points. Talked about cashing out existing reward points, but I could see earning crypto as reward points being an incentive for people to use this long term. Now, I'm not huge on airline points in the first place, because typically they're just a way to get people to spend more money, and they financially usually aren't better off with the airline points. Like, it's usually a better deal to just not do the points and then get cash back. You'll probably end up netting better in the long run, but people like doing it. So if you like doing it in the first place, you might as well earn crypto, something that could potentially appreciate over time. And I could see that being a big use case here. Also, I could see a big use case, and I'm just kind of thinking this off the top of my head, would be a new sort of reward point system that is tokenized on the blockchain, that's not, within a central company's control, right? It's sort of a universal reward point that could be cashed out, rolled over to something else. But at the end of the day, that might just be a cryptocurrency. Okay. I'm just thinking about airline points, how they work now. It's well, you swipe a credit card, you get airline points. Let's say you get, enough for one flight. Well, it's then a lot of times you're locked into the flight for that airline. And how do you basically how would you get a point that works universally? Well, that's kind of just what a cryptocurrency is in the first place. It's just a universal currency you can redeem for whatever. And who would have the incentive to issue something like that could be used universally? I don't know. If you all can think of a compelling way to have a universal reward point for credit cards that's tokenized on blockchain, let me know in the comment section below. If somebody can crack that problem, then it sounds like there's probably a big opportunity there. Somebody says, see BlockFi credit card reward program, and SoFi has a card where reward points can be converted. Okay. So it looks like there are people who are doing this type of thing. Well, the cool thing with MasterCard is they're opening this universally to lots of different people who could enable this with probably just a click of a button, would be my guess. There may be more friction than that, but it's really big. All right, so let's go ahead and check on the crypto markets here. I've got other stuff I want to talk about for sure, but let's see what's going on here in crypto land. Okay, so we're seeing a bit of a correction in most cryptocurrencies except Shiba Inu. Okay. Bitcoin is seeing some resistance around its all-time high levels. That doesn't surprise me. I mean, we talked about this the other day, also yesterday. I could have seen it going either way at the all-time high, where they just smash past it and start entering into price discovery mode, which I think we eventually will get there. But for the the short term, we might see some resistance around here. Okay, so we're on a little bit of a short-term bearish trend right now. I'm not saying that we're entering into a long-term bear market. That's not what I'm saying. But we could, retest some of these previous levels, like, back kind of in here, okay? Where we had these previous resistance points, like we may retest those. We may break back down below. I don't think anything big picture has changed in terms of seeing a bull market continue from here. We just might be patient. That's really all it is. Same story for Ether, is what I would say. I do expect to see, ETH and other assets break new all-time highs as well. I mean, we hit a new all-time high here, all right, but we didn't confidently smash past it. We're still seeing some resistance at this level. I think we just need time. So let me know what you think in the comment section below. When moon? Soon. Soon is a relative term. Not in 100 years. Waiting for a big crash. We might have to wait a little while. I would be surprised if we saw a big crash anytime soon. Okay, so let's look at a couple other things. So we're seeing lots of we're seeing some interest. I want to respond to a few comments on the crypto markets and just crypto in general that we're seeing from different people in the space, especially outside the native crypto space. So we've seen Michael Burry deactivate his Twitter account. So people are talking about Michael just kind of having the wrong calls on a lot of stuff. So I don't know if you know who he is. Basically, have you ever seen the movie The Big Short? He's the subject of that movie. So he was massively right about something in the past that made him really famous. But being wrong about a lot of other stuff. So, I mean, this happens. There are people who are, very smart, who have a really unique ability to do a handful of things. And those strengths allow them to be highly effective at that, but then perhaps not as effective at other things. And you see this problem happen a lot where people get really confident in one area, and then they think that confidence and ability transfers to other things. And it just doesn't. There's also the idea that, a broken clock's right twice a day. I think it's a little bit strong, right? I guess if you have a permanent bearish outlook, then eventually you'll be right. But I guess you have to kind of weigh that with consistently wrong in other times. Okay, so another thing is we're looking at we're seeing more comments from SEC Chair Gary Gensler on DeFi, what needs to happen here in the space in terms of regulations. So we saw a quote come out, so DeFi will end poorly without protections. All right, from SEC Chair Gary Gensler. So the SEC Chair has once again compared the rise of DeFi to the Wild West, stressing that it needs better investor protections. So basically, it's classic political stance of here's a problem, and I am the perfect person to fix this problem. You know, you frame a problem, and I can alone fix this. So the emerging decentralized finance industry is one of the most innovative areas in crypto, according to U.S. Securities and Exchange Commission Gary Gensler. That doesn't mean it can. That doesn't mean it can evade regulation, he added. All right. So we've seen this a lot, right? And I mostly just bring this back into the conversation because we're seeing this reiterated. All right. So basically, my stance. I'll reiterate my stance, which is basically I think DeFi can exist just fine without regulations, but I do think that regulations are an inevitability. I think it's futile to just resist any regulations because you're not going to win that fight. So that being said, what can you hope for? Well, you can hope for the best compromise, which would be the most favorable regulations possible for DeFi, which in my opinion, I don't know exactly what that would look like, but I think it would fit a few principles. One principle would be minimal regulations, like regulate the least amount that you can. And then number two is don't take existing regulations from, equities markets and just like graft them onto crypto. There's an old adage that, every man with the hammer sees every problem as a nail. Well, you don't want to treat crypto like a nail if that's what the equities markets are, which is very likely what's going to happen with somebody who oversees that, right? So basically, we need people who really understand crypto to come in, understand deeply what it is, understand the spirit of what the regulation is trying to accomplish, and then build something from the ground up, bespoke, to fit what's happening with crypto. That's the best possible trade-off. Now, even then, I'm realistic, and I don't think that's actually what's going to happen. But if we're going to fight for it, that's what we should fight for, in my opinion. Keep looking at SHIB and SafeMoon tokens, and years you'll be looking real dumb. I don't think I'll be looking dumb. So here's the thing. I'm not saying that SHIB or SafeMoon can't moon. All right. I'm just saying I'm not touching them. Somebody says on-chain. Yeah, we can look at on-chain here shortly. Let's go ahead and look at some on-chain metrics. Somebody requested that I look at on-chain metrics. Let me just pull it up here on my screen. Okay, hold on. All right, so let's see here. So let's go ahead and look at some on-chain metrics here. So we'll look at our net unrealized profit loss metric in determining sort of the froth of the market. Let's just close this. Sometimes this interface gets kind of confusing. Hold on, I think I have to do this. Yeah, it's kind of lame. Okay, so our Nupal metric has come down a little bit. All right, so we are currently at 0.63. All right, we peaked up at about 0.65, so not that significant of a difference. Last time we were at these values was, definitely earlier this year. Sorry, let me zoom out. This is basically back from December levels right before we kicked off the major market rally, and also hit it again in February. And then we were basically above these levels until the major crash happened. All right. So this very well could be, once we break these levels and break new all-time highs and enter price discovery mode, that's sort of like a rally that takes us to a top that would take us in the blue area. It's very possible. I don't know for sure, but that's a likely scenario in my mind. At the end of the day, you always have to think about crypto markets in terms of probability, likelihood. Nobody knows for sure what's going to happen. You develop a thesis. You kind of generally think how that thesis will go based on a lot of educated data points. And then you constantly try to figure out how you might be wrong and use lots of data to support it. And, just try to forecast where you think the puck's headed. Somebody says, is it okay to swap all my coins into ETH? I'm a bit tired of watching all coins go up and down. Still don't want to be involved without checking every day the coins are doing. Is that okay? Well, I don't really like to give financial advice on the channel, but I'll tell you one of the reasons that, I hold a lot of ETH is precisely the reason you're talking about. Because at the end of the day, I made a big concentrated bet. Some people ask me, full disclosure, I've talked this a lot on my channel, but in case people don't know, ETH is my largest crypto holding. Why is that? I work with the technology all the time. I've also made a big bet on the technology in and of itself. Some people think, oh, you just talk about ETH because you bought that and that's like what you want to talk about. No, it's backwards. It's the opposite. It's like looking at all the possible opportunities on the table. This seems like the best place to invest not just money, but like time and energy, because time and energy is your only non-renewable resource. You can't really, time is your only non-renewable resource. You can't get that back. It takes time to develop expertise, right? So that's where I focus a lot of my time and attention. So the capital follows that. All right. And so, like I said, my investment thesis is as you create technology that has, real demand for it and that can attract users based on those benefits. And as far as cryptocurrencies actually integrated in that technology, that value can accrue to the crypto assets itself. So when you see stuff like the Ethereum network, active addresses just trending upward long term, I see the cryptocurrency prices following that type of thing. Exponentially. So that's one of the reasons I back it so much. And that actually helps avoid the problem that you're talking about, which is, having to watch a bazillion different coins and worry whether they're going to go to zero or not. Like, ETH's not going to zero. It's probably going to be worth a lot more than it is today for the foreseeable future. And I think it's got a higher upside potential than Bitcoin. I mean, you can make a lot more money in the short term with other stuff, but you got to pay taxes anytime you cash out. You got to do all this stuff. You might not be able to stake it. Like, there's lots of reasons why ETH is my biggest bet. So do with that information what you will. Put it that way. Somebody says, does Elon Musk support ETH? Well, I remember the call that he did with Kathy Wood and I can't remember who else was on the call. But he said he personally owned ETH. Okay, so, more stuff that I'm seeing in the... More stuff that I've seen people talk about is what's going on with, the proposals to tax unrealized gains in the United States. So, I guess we'll talk about that for a minute. And this kind of it's relevant to crypto. All right, it's not as political. I don't want to get too political in this. I'll probably be pretty evident what my stance on this particular issue is, but we'll talk about it because it's relevant to crypto. People in crypto are talking about it a lot. So. We've seen some talk about taxing unrealized gains in the United States. So what is that in the first place if you don't understand? So let's say that you bought Bitcoin at, $30,000, right? Or we'll say $40,000 because that's a relatively recent price in Bitcoin. You buy Bitcoin at $40K. back in a couple months ago, right? And now Bitcoin price has increased to, $64,000, $65,000, whatever it is, right? So you've seen a 50. Let's just say for example purposes you bought one Bitcoin, okay, and that's a lot of money. But let's just assume for example purposes you did. You bought $40,000, one Bitcoin. It's increased now to $65,000. You've seen a $15,000 increase, all right, in the price. Now, those are just paper gains or unrealized gains until you actually cash it out into, fiat currency or stable coins or trade it for something else, right? That's what the IRS, at least in the United States, considers realizing the gain. And whenever you realize the gain, that's when you're liable to pay taxes on that gain, okay? That's how the current tax system works. And if you hold that asset for less than a year, you're subject to your normal income tax rate at the highest marginal rate. And if you have held it for longer than a year, then you're subject to a long-term capital gains rate, which is based on, your tax bracket. It can, somewhere between, I can't remember the percentages off the top of my head, but it's, I think the highest one's about 20%, right? So, that's how the taxes work now. Now, the proposal, what they're talking about is taxing unrealized gains, which is assessing the value of that on some regular basis. I believe it's annually, or I don't have all the details on this. I just understand like the nature of what they're talking about, and then applying a tax to that unrealized amount, even though you haven't sold it. So if you just have assets and they're appreciating in value, you're not touching them, well, then you're liable for the taxes. You're liable to pay taxes on that. They're just going to assess whatever it's worth. And now I believe this also applies to people above a certain income bracket, okay, or wealth bracket, okay. But that being said, typically how these things work is they start off one way and then they creep down further and further and start applying to more and more people. Okay, so you could definitely see that happening. So, I mean, like I said, I don't want to get too political in this regard, but this is relevant to crypto. So, I mean, I just don't think it's a good idea in the first place. I mean, I won't be shy about that, but here's why. I mean, there's lots of reasons why, but one of the biggest reasons is how would you implement it in the first place, okay? So let me talk about some problems. So there's lots of ways in which it can be challenging. Let's say that you have assets that have appreciated in value and that those assets are very illiquid, okay? So let's think about like private equity. Let's say you own shares in a company that's not public or something like that. Like a startup, for example. Let's say you own real estate that's not very liquid, all right? Or let's say you own NFTs, okay? And, those have grown quite large. And let's say that you take, let's say your cash flow is small compared to the assets that you have. Okay, maybe you're a startup founder and you pay yourself a low salary because you want to, funnel those resources back into the company and that appreciates in value. Well, what if they assess that? I realize you may not be in the tax bracket to do this, but let's assume that over time this happens. Like they assess that and then they say, okay, well, you're liable for these taxes on something you haven't sold out of, but you have a small cash flow. It's like, well, then you're forced to sell something to cover that tax burden, even though you haven't done it in the first place. So what are you going to do? Are you going to cash out part of your shares of your startup equity? What happens if nobody gives you liquidity on that startup equity, right? And what if they do? You're forcing someone to have less and less control over their startup just to cover a tax burden. That's kind of crazy. Think about it, something maybe more relevant for people watching this who might understand, might resonate more, which is like NFTs. What happens if you bought a CryptoPunk last year, all right, when it was cheap, like super cheap relative to what it is today, and your CryptoPunk, is now worth like $500,000 or something like that. All right, and then let's say like you had this amazing windfall, okay, and you got kind of lucky and your CryptoPunk skyrocketed in value. You haven't sold it yet, you haven't realized any gains, but you're still like working your regular job. And then they say like, hey, you owe us taxes on your CryptoPunk increase, and now your tax bill is bigger than like your cash flow can support to actually pay that. Where are you going to come up with the money to pay your tax bill? Like there's lots of problems here. Same with real estate, like, are you going to have to refinance your house to pay your tax burden? It may not apply to primary residence. I don't know. We'll see. Like I said, there's lots of details that I'm not fully clear on and how this would be implemented long term. I'm just talking about extrapolating this to the next logical conclusion of where it would head and why I don't think it's a good idea. Can we reduce gas fees through code and Solidity? Yes, you can. You can optimize your code to reduce gas fees. Smith says this BS. They can't do that. How can you tax an unrealized gain that might go down in value? The other problem is, I mean, what that would do to growth. You know what I mean? Like, what would that do to markets if people like had to cash out their unrealized gain? Like, I don't know. I just don't think that's like, if your goal is to increase tax revenues, I think there's a better way to do it that wouldn't shoot yourself in the foot. All right, everybody. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? Well, you go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, actually become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.